All right, everybody, welcome back. It is the broad market analysis. We will be covering the 12th of May, so tonight, starting with futures, all the way into the 17th. First, happy Mother's Day to everybody. Hope you're doing really well today. And again, thank you so much for all of the support. We had our webinar last Wednesday, and it was a huge success. Lots of new members here. A lot of you seeing the proof of concept that we are teaching you, not only in zero DTE trading but just showing you the proof of concept with using supply and demand. Well, guess what? This Wednesday, if you missed it, please join us for our next webinar. It will be free. It will be 7 o'clock Central. Be looking for that link on either my social media, which is Trendy John on X, or look at Simpler Trading social media as well. I'm sure they'll be putting out the link as well. So you'll be seeing a lot of that coming up into this week. So again, hope to see you there on Wednesday at 7 o'clock Central PM time. Let's go ahead and get started with this broad market analysis. I'll make this quick so you guys can get back out there and do what you need to do on this beautiful Sunday for Mother's Day. So this week we'll go over the econ data. Basically, any information in here suggests that we could see some volatility in the market. But just remember, we're always identifying these zones and these levels during this broad market analysis in advance. So whatever comes out here, you need to be aware of the times and so forth, but don't be scared. Again, we're finding the levels. Our job is to learn how to execute these levels, all right, and align ourselves with the bigger money. So on Monday, we have one thing coming in. This is Eastern Time. Fed Vice Chair Philip Jefferson and Cleveland Fed President Loretta Mester together on the panel. And you're going to see this is kind of the theme of the week: PPI, core PPI, CPI, and so forth. But a lot of talking heads to include our boy Jerome, who we'll be discussing here in a second. On Tuesday, May the 14th, again, core PPI coming in. And then we have some Fed heads talking. And then our boy, again, Jerome 10 o'clock on Tuesday. So let's see what kind of tone they start out with tonight. We'll be finding those zones. I love creating zones into any time that Jerome has something to speak. I'm not sure how much volatility, his discussion is going to bring to the market, but again, we'll be finding those zones for you. On Wednesday, we'll be looking at Consumer Price Index, CPI, and then U.S. retail sales, interested in those as well. And then home builder confidence. I definitely want to see how that's going. And then a couple Fed heads speaking again. And then on Friday Eve, which is Thursday, we have initial jobless claims, housing starts, building permits, capacity utilization, and again, lots of Fed heads speaking here throughout the end of the day on Thursday. And then on Friday, U.S. leading economic indicators, and then Fed Governor Christopher Waller. Before I go on, please hit that like, and that way we can continue to give you this fine information, this great information that I've been doing for so long now. And really, at the end of the day, it's all you need to really get yourself started for the week and look for the right trends. So, again, thank you so much for your support. Earnings Whispers, these guys, I use them, been using them for, man, since I can remember. Great information here, just really easy to look at the calendar and understand what's coming up for the week. But as a reminder, always check with your broker just in case. Every once in a while, these companies like to switch their times on them. So it's something to be reminded of, especially if you're going to be trading a name and it has earnings coming up. Please be aware of that. As far as anything that I've underlined green, it just potentially means that I am interested in trading it into earnings with some of my debit spreads that I do, or I'm just interested in the name itself. And one is going to be BABA. If you remember, we started some leaps on this. We made 80%. I think I closed those about a week and a half ago. I got out and then I bought a few calls just with like minor, or I should say minor, very low amount of profits from the original trade. And I'm just going to hold that into earnings. And again, that's just calls. We'll see if they do anything miraculous. I'm not really looking for anything in particular. Again, it's free money with the first trade that I took. Down here, Home Depot, I'm definitely interested in these guys. And then I have an underline, as you can see, Cisco on Wednesday. And then moving on to Thursday, we have some Walmart, AMAT, TTWO, Baidu, JD, and then my favorite, one of my favorites to trade, John Deere. And then other than that, I feel like it's pretty quiet. I am interested in UAA. I took a position Under Armour not too long ago, and it didn't work out for me. And the options were inexpensive. I was looking for some kind of move with the old CEO, I believe it is, that came back. Was hoping to see more of a push there. It didn't quite happen in the time frame that I was looking at, but I am interested to see if they can have a turnaround story. This CEO had a lot to do with their push in the earlier years, and again, I'm just kind of interested to see what they can do. So these are the names that I'm interested in. We'll go ahead and move on. This is going to be the SPY and QQQ neutral strategy. If you remember, we used the same levels for the last 2 weeks, and they worked very, very well. This being Monday, Tuesday, Wednesday, Thursday, and Friday. One of the first things that I told you on the last BMA was that we were going to use these levels, and wherever we opened, which was here, we were looking for the line to the downside to be support and the lines to the upside to be resistance. My overall sentiment again was bullish, but with a little bit of caution, and we'll talk about that here a little bit later. And overall, it moved right into the targets we wanted. You'll notice that we have some trendy edges in here. These purple and yellow are identifying supply from previous levels. And you can see over here on the Qs the same thing. We stalled right at those levels this week. So that is going to basically be your line in the sand going forward. Let's go into this week's levels. This is where you want to go ahead and stop and or pause the video or come back to it after we're finished. Also, give me a like. Don't forget to give us a like and share this video with your friends and family because it really can help you. The neutral strategy is something that I develop for traders who do not have the time to sit in front of charts. Matter of fact, I'm giving you your time right here on a Sunday to go ahead and identify these on your chart. Watch the quick video that I give you out on YouTube, how to trade the neutral strategy. You could set up OCOs around this. It really makes trading, I think, more pleasurable because you don't have to watch this. And again, this is for you traders who don't want to be in the charts, in front of the charts all the time. So our neutral strategy is different this week. You can see neutral for the SPY is between 521 and 517. Pretty average amount of risk here, and we are above the cloud, so that's a great thing. We're getting a little extended from it. We did stall at the trendy levels, and there is a possibility for a slight pullback, and that's going to be the theme this week. Is I'm overall bullish, but we are coming into a supply zone where we did back off, and the question is, can we just flag here and build in this neutral zone? Wait for this 9 EMA to catch up. So a couple days be pretty boring. And then as we come in and build that value in the neutral, we could see a breakout into all-time highs again. Okay. So that's my thought here on this. Now, for some reason, I'm wrong and we continue to dip to the downside, just like a lot of my past broad market analysis or neutral strategies. I'm looking for buyers to show up around target 2. All right, so again, target 2 if I'm wrong, and we dip a little bit harder than expected. Over here on the QQQ, same thing, 443 by 438. Pretty standard, a little bit wide there on the wrist, but again, same thing. Not quite extended, in my opinion, from the 9 EMA. We are pulling back from that trendy edge. You can see there's a little flag being built there. So again, same thing. Let's see if maybe into Jerome on Tuesday. It's just kind of flat to sideways on Monday. Maybe like a slight gap up, but not over the Friday high, and just kind of building value in here and waiting for Jerome to talk. Again, if we were to get that dip, I'm looking for buyers to come in around that T2. So it doesn't have to be perfect. What I mean is, let's just say it dips a little harder. Monday looks something like this, and then Tuesday does this. I'm looking for buyers to show up. Now, on both charts, I did identify 2 demand levels. You guys can see those. When it says tested already, basically the zone was created here on the inside and up, and these candles came back to test that demand. So this is what we call not a fresh demand zone. Now, even though I don't really anticipate a sudden big volatile move to the downside, you never know. And if that were to happen, what I'd be looking for as soon as we get close to this is for me to try to take a long. I'd be looking to take that long off the idea that demand holds again and we're just making higher lows. So even though it's violent, boom, I'm looking to go long, and then we're looking for this bounce up sort of like this, okay? So again, in the event that happens, I'm not really anticipating it, but again, you never know. Moving on, SPY bigger picture. I'm going to go ahead and move this out of the way, and we are going to bring up TradingView, and that makes me think of the fact that right now we are doing our swap to Schwab, right? A lot of people are, and so far I can bring up my charts. I just can't see any of my account info at the time. I'm sure all that will be situated. While I'm on that note, there is a possibility that my API alerts are disrupted during this change. We have no idea until tomorrow, but in the room, if I end up taking a trade, I'll know right away. If that alert doesn't come through, that means we're going to, well, for me on my end, you don't have to do anything, but on my end, I'll have to reach out to my developer and look to see to get that situation corrected as soon as possible. So again, a lot of changes. Hopefully it won't disrupt anything. Keeping my fingers crossed. Here is SPY, the bigger picture. This is a quarterly candle. I made it really simple this morning. Everything's worked. I feel like we've really been coaching really well this year. Not that it's been the easiest year, but just understand the coaching, what we expected, and all that type of stuff has worked out very well. That 23.6, boom, which we called support a long time ago, has worked very, very well. And you can see that. And we got this really beautiful stick or wick that came out of that. It's a nice little hammer. And the question for me is this going to turn into three white soldiers? And what that means is basically we're going to mimic a continuation candle here and could end up looking just like this. All right, but we're not quite there. We're almost there. And again, we are very close to the possibility. But the bigger picture is 523 is your resistance, 524 and some change is your all-time high, and 497 is your support down here. All right, short term, all-time high is the goal, which is 524.60, and use the daily 9 EMA as support. So yes, this is a 3-month. I would go to your daily and look at your 9 EMA. It's a nice support, and it's not too deep, and it should hold for this coming week. Again, the BMA, the broad market analysis, we're basically going from week to week, but this is a quarterly look for our traders who have a much bigger time horizon and are holding positions for a lot longer. Okay. All right, the next thing I'm going to look at are the Qs. So this is going to look a lot just like the SPY. We have a nice little wick here. It looks like we could turn into three white soldiers here. But again, resistance is around 446 to 449, which is around that all-time high. And support is the 9 EMA on a daily. So if I come over here and show you on a daily, you'll notice here that your 9 EMA is right down here. So if we get that little dip, this is where I'd be looking for a little support on that move back down. Next thing that I want to look at is the dollar. So we're going to go to DXY. We're going to go into a weekly on this particular time frame. Nothing's changed if you've been following me for many, many years. And over the last year and a half, we had the same supply zone. Price came down into demand. We were looking for the market to kind of, ease up. But this was from October when we had this big pullback out of supply. The market went bid, and basically it's been very, very bullish. Now we hit the supply zone again. The dollar pulls back. We expect the market to be a little bit more bullish. That's what we've been getting over the last couple weeks. But there is a just slight bit of caution, and we've been saying this for the last couple weeks, and you can see that price came in last week right into this formation here. It bounced. We said, hey, a little bit of caution. I'm going to say this week a little bit of caution, as well as the 9 EMA looks like support, and it could round up and the dollar could come up here. But the thing is, as of right now, this trendy edge and this supply zone is working really well. So the dollar is pretty much stuck, the way that I see it, is stuck between these two demand zones. And if we look at these, you can see that we are basically equilibrium between two opposing zones. When we get to the middle, don't diddle in the middle. I just think that it could be a little choppy, a little boring. I wouldn't be concerned about the dollar unless we start to close on over this 106.5 or 44. And for bulls, what you need is to see this dollar start to go underneath the 9 EMA, and basically it'd be, let's create this like around 104.97, somewhere in there. That lets you know if the dollar starts breaking under there, we're probably going to see the dollar, come into this little area, bounce again, hit resistance, come back down, and I'm looking for the dollar to actually come back into this demand zone, which comes in around 103 and some change. Okay, so 103.60. All right, so going into this week, bit of caution just because we're right here above the 9 EMA. Let's go ahead and move on to the 10-year Treasury, the TNX. My biggest thing here, it's not about, it's just more about going sideways to down. I love that. It hit a supply zone. It came back. The market got bullish. But just like the dollar, you can see it came right into the 9 EMA. It bounces. We find a little bit of support there. And so I would say just a little bit of caution. Now, this is a little bit different. If it moves all the way up to here, people start to get really concerned, but I still stick to my overall analysis of the TNX. And as long as we're in supply, I think it's going to have a hard time. It's going to keep pulling back here. It gets little bounces at the smaller time frame levels like the 9 EMA, some Fibonacci's, some demand zones. We get little pops. But overall, I really do believe that we're headed back down a little bit lower in here around 4 to 4.2 and possibly back towards the middle of summer all the way back down into this 3.8. So again, that is voided if we start to break over the major level, which is above 4.8, and then that's a whole different story. All right, let's go ahead and move on. We're going to go into the skew, guys. This is our hedge funds. How, I feel like I got this nailed down. I don't want to go too much into specifics because I've done so much information on this, but you guys know how I feel. We've been over here since over a year now. We've been sitting in here, and it's an opportunity every time we come here to this protect risk off. I gave you this annotation to buy calls 5 to 10 days out. Every time you do that, you're going to be making some money until I'm wrong. And when I'm wrong, and what I would say, big red flag, is if we start to get a weekly that actually closes underneath this level, and that level is around 133 and some change. All right. Now, as the skew goes up, what's happening is hedge funds feel a little bit more vulnerable. They feel like, hey, I need to really protect myself. And what we're seeing is that the extreme levels up in here, 154 to 158, somewhere in there, is what the market is giving us, and that puts us at greed and extreme greed. But we're not getting the overall extreme fear, which is down here. All right, so we've been hanging up in here since over a year now, and these levels are just working really well. If for some reason we come back here, this is where I'm really going to be happy to buy long into election year. I feel like, hey, I'm going to definitely press the gas here. It's going to be really scary, but I love doing that, and that's what I'd want to do. But for now, we're just living between here and about right here and just have fun with it. So again, market pulls up here, be cautious, maybe take some of those longs off, pull up trailing stops, and then when market comes down here, people start talking about rates, and they start talking about elections and all that jazz. But again, 5 to 10 days here on the call side has been working out as well. All right, speaking of, here is the fear and greed. We're at 48. We're back to neutral. All is good in the market. Who's scared? Not me. Are you scared? Not you. Is anybody scared? That might be a problem. We'll see. But again, neutral. My whole sentiment is have fun. Maybe look at it from a perspective of scale into positions, and if we're wrong, we'll add into them. It's all about allocation. It's all about the stuff that we teach every single morning. Mel and I just absolutely love to do that. And if you guys have any questions, please let us know. But again, we're neutral. We're in earnings season. We have Jerome coming up on Tuesday. We have a lot of Fed speakers. We still have earnings on the table. A lot is looking great from a weekly and monthly and quarterly perspective, but just looks like a small pullback could happen for that buy the dip opportunity. So again, opportunity every single day is all I see. Let's go over here into our futures. This is where it gets really interesting. We just used our Fibonacci. I shared this last week. Um, uh, Meaning the fibs and the verbiage that I want to use here. Now, this buy zone was here a long time ago. We waited for price to come in here. This is where we got bullish in the market. This is where things really turned around for the bulls. And then our big thing last week was, can we get over the 618, which is the golden Fibonacci level? That's exactly what we got over. My probability is, say, 85% probability we can hit the 88.7, which is 52.91. But before we did that, or before we do that, we have to come up here and test the 76.4, which is what I call imposter. Just check out your videos that are in the room. It teaches all about the Fibonacci, okay? Now everything's been right. Again, trend change at the 618. Boom, resistance between here. That's exactly what we saw. And again, my overall target here, but that doesn't mean we just go straight up. It means we could pull back to those lower time frames. I'll show you here in a second. Moving on to the daily, this is important. I kept the before and after just to show you the proof of concept. Please go in there into the room and look at those charts. These are your new levels. Go ahead and pause, put these on your charts, and watch the beauty happen. Basically, what I'm saying when I say ME, hopefully you guys know the acronyms. ME stands for the monthly edge, WE is the weekly edge, and right here for the trigger long, I'm using this inside and up formation, and for this trigger long, I'm using the lower WE or weekly edge. Moving on, this is the 4 hour, not to be not to be mixed up with your intraday trading future charts that I give you with liquidity, chop, and all that good stuff. This is totally different. These are our support zones to the downside, and my sentiment is bullish. However, right now we created it inside and down on Friday. It's not like anything serious, so I'm calling it resistance, not supply. And the reason why I do that is because the move down is not big enough. There's not enough range here, so it's only resistance at the moment as we are supported by the 9 EMA. If for some reason we get pullbacks, each one of these green boxes represent where I'd be looking to try and get long. It doesn't mean I won't get short at any point during the week, but it might mean that I don't get short on the SPY, but I might get short on the futures or something like that. Okay. But as long as we're supported, all right, by these 9 EMAs and this resistance, I think just like I was saying on the bigger time frame, that we could flag in here. If Jerome says something, I don't know, hawkish, you could see a move down into this zone, and then I would expect buyers here. All right. So again, that's the 4 hour, and overall, my sentiment is bullish, but keep your eye on these lower green boxes as they can serve as great opportunities to get long. Let's go into the NASDAQ. We're going to go over here to the weekly. Same thing, looks great. We had, instead of 3 weeks down like the ES futures, we had 4 weeks down, and now we've gone 3 weeks up. We got above the 618 last week, meaning those 4 weeks are no longer a downtrend, meaning we broke that downtrend. Sorry, we came up, we hit the 76.4, which is the imposter. When you look at the details of my Fibonacci that I teach, a lot of times what I talk about is the imposter will move price back to the 618, make a lot of bears feel like, yep, it's time, but we're supported not only by the 618 and the 9 EMA, but then it shoots up and we get like this really dramatic move up into the 88.7. So again, my overall target, 88.7, as long as the 618 can hold, and you could say that on the ES as well, 88.7 as long as 618 can hold. So that is my weekly focus. What it means is I don't care what happens on Monday, Tuesday, Wednesday, Thursday. I want to know by the end of Friday that my overall chart worked out here for our longer term traders. Here's the daily, same thing. Please look at the before and after. We have the short trigger, we have the resistance area, and the long triggers. Doesn't mean that we won't get long somewhere in here, everyone. This is just on a pullback. This is where I'd expect buyers to show up. And again, using those acronyms to help you out. And guess what? We're very, very close to the all-time high. So you should be super excited, but you also should be a little bit cautious as we have come into just a little bit of supply. Moving on to the 4 hours, same thing. This is going to be called resistance. We're still holding up at the 9 EMA. We do have some green boxes. They're pretty wide. We could get a little bit more into the weeds, which we will on execution. That'll be for our future charts. All right. So again, nice. I'll tell you this: out of both charts, the ES and Nasdaq, this is my bigger focus. Would be like if price were to come back to here. There's a really nice imbalance in the market. We had some kind of catalyst there. Price shot out. And then the idea is that orders weren't filled quick enough. And so we get an imbalance in the market. And anytime that we typically run out of buyers, we will then come back to those bigger areas imbalanced for a fill. So just please keep those on your radar. You put you could put an alert or something like that around it. All right, guys, I really appreciate you. Thank you so much for hanging out with me. Don't forget to hit the like button, and we can't wait to see you in the room and possibly make the time to come into Wednesday to see our free webinar. Can't wait to talk to you then.